Welcome to this in-depth strategy review. Ceylon Cold Stores PLC, referred to almost universally by Sri Lankans as Elephant House and Keells, will be the case studied with the company's integrated annual report of the financial year 2024-25. Over the next 15 minutes, the focus will be on the firm's vision and strategic direction, internal and external environment, competitive and corporate strategies employed by Ceylon Cold Stores PLC, execution via people and culture, and finally the effectiveness of the strategic initiative undertaken by the company. Here's our roadmap. We shall start by introducing Ceylon Cold Stores PLC today and proceed to look at their vision and strategic priorities, assessing both external and internal forces that shape decisions made, studying their competitive and corporate level strategies such as diversification, and finally showing how people, culture, and structure help in implementation of decisions.
Ceylon Cold Stores PLC started its journey in 1866, when it established the Colombo Ice Company, and operates today two different, yet interrelated businesses under the wing of John Keells Holdings: manufacturing, the Elephant House production of drinks and sweets, and supermarkets, running under the JK Marketing Services and Keells brand. The company has 138 branches, more than 8,500 employees and about 157.9 billion rupees, FY 2024-25, of group revenue enjoyed by Ceylon Cold Stores PLC, operating at the very interesting strategic crossroad. On the one hand, it is the manufacturer that competes on the basis of brand and innovation. On the other hand, it has to compete in the retail sector, providing customers with convenience as well as price and service level. Ceylon Cold Stores PLC wants to bring pleasure and nutrition through its products, while saying that Keells, its grocery business, wants to improve life standards within the country. The business strategy is defined at its parent company John Keells Holdings and flows down through president of divisions. Decision-making is guided by 5 principles: innovation, integrity, excellence, caring and trust. The implementation of strategy is organized around 5 strategic priorities of CCS created by its value creation model: sustainable growth, keeping customer promise, empowering employees, stakeholder management, and being sustainable and responsible company. Considering the external environment, beginning with PESTEL. Sri Lanka has been politically stable after the elections of 2024, having overcome the sovereign default. The economy has experienced a GDP growth of 5%, inflation decline, as well as an appreciation of the rupee, which have all contributed to reducing costs of inputs and improving consumer sentiment. There is a social trend of moving from traditional trade to modern trade, which is beneficial for Keells. From the technological standpoint, CCS is devoting time and resources to investing in advanced analytics and enhancing the digital retail. Environmentally, there is an increase in the regulation of plastics and emissions, while legally we may highlight that the higher excise duty imposed on carbonated drinks together with the new food labeling requirements represent compliance and margin issues for the manufacturing sector. Applying Porter's 5 forces, rivalry is high, both in FMCG beverages and confectionery, and in modern trade grocery against players like Cargill's and Arpico. Both arenas see frequent new product launches, aggressive promotional activity and price competition, which is exactly the kind of environment where brand loyalty and distribution reach become decisive. Buyer power is high given price-sensitive, deflation-era consumers, though CCS counters this with its Nexus loyalty program and 2.6 million members, which builds switching costs through personalized offers and accumulated rewards. Supplier power is moderate. CCS manages this through backward integration, owning its own bottling and canning capacity, and through farmer development programs that secure raw material supply on favorable terms. New entrant threat is moderate. Manufacturing requires heavy capital and an established distribution network, but retail entry is comparatively easier, which is one reason competition in modern trade keeps intensifying. And substitute threat is moderate. from general trade, informal retail and private label alternatives offered by rival supermarket chains. Overall, this is a structurally competitive industry where scale, brand and distribution reach are the decisive advantages, and CCS's century-and-a-half of market presence gives it a genuine head start on all three. An internal examination of the firm using VRIN indicates what it has as a competitive advantage and what is merely a necessity to compete. Ceylon Cold Stores PLC has an exceptional 159-year history of its Elephant House brand that passes all the 4 VRIN tests for it being valuable, rare, difficult to imitate and embedded deep inside the organization with years of consumer trust, distributor ties and association with the culture of Sri Lanka. The Ceylon Cold Stores distribution framework and backward manufacturing causes are both valuable as well as rare, although they can still be imitated by a competitor who is ready to invest to be able to compete over time. The availability of funds from John Keells Holdings is valuable, but it is not rare. The same access to capital is available to other companies in JKH sector. Its extensive collection of analytics information regarding customer experience is rare and difficult to copy today due to the large scope of behavioral data obtained. But at the same time, the company is still working on these capabilities. Summarizing the present information in a SWOT format can state, the biggest strength of Ceylon Cold Stores is its brand legacy, the broad range of manufacturing and retail models, and support from John Keells Holdings in terms of finance and governance is seen in a strong FY 24/25. The weaknesses include having a low current ratio indicating some difficulties with working capital and being influenced by the excise policy regulating carbonated drinks. The opportunities hinge on the expansion of the franchise in India, premium positioning of the confectionery goods and the importance of the shift to modern trading process. The threats are connected with the prices of cocoa and the input costs volatility, tariff risks due to geopolitical situations and increased competition. With reference to competitive strategy and using Porter's generic strategies as a foundation, Ceylon Cold Stores has adopted 2 interconnected yet dissimilar strategies. In the manufacturing sector, the company practices differentiation by means of its activities such as a continuous drive for innovation, the achievement of a strong brand equity gained during its 159-year existence and the investment in promotional activities for brand promotion such as the partnership with Sri Lanka Cricket. In supermarkets, Keells relies on efficiency, targeting the market with the help of its wide 353-product private label range, the efficiency of its loyalty scheme and the special affordability campaign. Thus, this dual approach helps Ceylon Cold Stores keep high price levels whenever it relies on its strong brand. CCS's timing and scale reveals a systematic and phased pattern in its operations. The backward integration into water bottles in 2021 has ensured control over its input resources. The signing of the franchise agreement with Reliance Consumer Products in 2024 established Ceylon Cold Stores' foray into international markets through production and sale of Elephant House drinks in India, these drinks being available for actual sales in southern India market in fiscal year 2024-25. Meanwhile, the expansion of production capacity of the Itapana PET bottling and canning plant has made possible the production of a line of canned drinks. More recently, the company is planning to invest in its new confectionery impulse line in 2025-26, which illustrates that Ceylon Cold Stores adjusts capacity investments to fit demand instead of doing the opposite. According to corporate strategy, Ceylon Cold Stores practices related diversification, not conglomerate diversification. The manufacturing sector and the supermarket sector of Ceylon Cold Stores use brand equity, insights about consumers, the potencies of supply chain, and resources of John Keells Group despite being in different levels of industry. There is a start of mutually reproducing system, where Ceylon Cold Stores products reach customers via Keells supermarkets while retail consumer insights promote product development. The vertical integration assists to gain competitive strengths, thanks to owned warehouses, plants creating cans, and water-producing facilities, minimizing dependence on suppliers and ensuring good exporting profit margin which otherwise might go to retailers. The international market is also catered to since Reliance Consumer Products gives agrarian-based growth while investing little resources in this. Although distribution started in South India, profitability is relatively low at the beginning of the expansion. Ceylon Cold Stores is structured as a sector-based organization, with separate sector presidents and heads of functional areas such as marketing, supply chain, HR, and finance, all reporting up to the board, chaired by Krishan Balendra, who is also the chairperson and CEO of the parent company. This structure enables both operational and strategic focus within each sector, while allowing group-level oversight. In terms of capabilities of people, achievement is evident from 225,000 training hours delivered in that year with a spending increase of 65%, 44% female representation, and employee satisfaction scores of 82% in supermarkets and 77% in manufacturing. The importance of leadership continuity cannot be underestimated because Chairperson Krishan Balendra is also the chairman of parent company House Keells Holdings, thereby strengthening the connection between the group strategy and CCS implementation. The board combines with independent expertise encompassing the areas of law, digital banking and research and development leadership people with vast experience in their respective fields. Among the recent changes that were made in 2024-2025 to strengthen control while CCS expands abroad are appointments of independent directors. CCS has also put itself into action culturally. This includes the Living Values Program, as well as all the initiatives taken to implement the Success Drivers Competency Framework, the results of which are controlled through constructive interactions via Sales Connect, while Zero Misconduct Policy has not registered any misconduct cases this year. The financial performance of Ceylon Cold Stores confirmed the validity of its strategy. The company's revenue rose by 13%, reaching 157.9 billion rupees, where manufacturing grew by 17% and supermarkets by 12%. The profitability ratio rose significantly in all segments since the gross profit grew by 30%, the profit before taxation by 83%, and the profit after taxation increased by 74% to reach 6 billion rupees. The growth was driven by the rising sales volume, lower electricity and input prices, and cheaper finance due to the decline in the debt-to-equity level from 82% to 67%. The return on equity increased from 17.2% to 26.7%. The earnings per share moved up from 3 rupees and 61 paise to 6 rupees and 27 paise, and the dividend increased from 1 rupee 70 to 4 rupees and 30 paise. Supermarkets doubled their profit after taxation, while manufacturing managed the operating margin of 15%, showing excellent operational efficiency and stable growth. In conclusion, 3 forward-thinking recommendations outlined using the issue recommendation timeline framework. The first recommendation is for supermarkets to address the decline of the current ratio through supplier renegotiation and inventory optimization in FY 2025-2026. The second recommendation is for India to grow its franchise beyond South India and focus on unit economics since profits are negligible at the moment. The third recommendation is to close the VRIN gap on analytics. CCS possesses valuable and difficult data on Nexus that needs to be put in place for future pricing and assortment measures. In conclusion, Ceylon Cold Stores PLC follows a coherent related diversification strategy, differentiation in manufacturing and cost leadership in retail, run through a disciplined and value-based organization under House Keells Holdings. The 74% growth in profits this year is a convincing indicator of successful strategy and execution alignment.